Right, good afternoon. Welcome to today's Planning and Budgeting Cloud Services webinar. Many thanks for attending today's webinar. I'm just going to go through a couple of introduction slides and then hand you over to John, who will be conducting the webinar. So myself, I'm Campbell McLeish. I'm the Sales and Marketing Manager at Nolan Business Solutions. I'll be just doing the introductions and the outro, as well as conducting a bit of a Q&A at the end, gathering people's questions, so there's an opportunity for that. And John Harfield, who's the Planning and Budgeting Specialist, will be actually conducting today's webinar, and he'll be going through a demo. So as I say, today's webinar, John will be doing a demo of the key features and benefits for the Planning and Budgeting Cloud service. This service is available for both Microsoft Dynamics GP and NetSuite users. And as I said, there's a Q&A at the end. So if you do have any questions, if there's anything that wasn't answered during the demo, then please just type in your questions and I will ask John, and John will hopefully answer them at the end. So without further ado, what I'll do is I'll just pass over to John. Should be able to see his screen shortly.
Yep, I'm just going to share my screen now.
Excellent. Thank you.
Perfect. So it looks like everything's there. I'll just hide my webinar controls because they're going to be of no use to me if they're in the way. So yeah, thank you for the introduction, Campbell. So yeah, my name is John Harfield. I'm a planning and budgeting specialist. What that means is I specialize in primarily helping people move away from the realm of using Excel for your planning, budgeting and forecasting, and systemizing it, putting it into an environment that's in the cloud that potentially has workflow and things around it. So the main aim being to speed up and optimize the planning process in the same way that sort of GP and NetSuite optimize things on the ledger side. When you move away from Excel for keeping your ledger, this is basically the same thing for planning and budgeting. Now, what I'm going to go through today is our starter offering. So what that is it's the entry point. So we can go much bigger, much greater, and have a lot more breadth and depth to the solution. But conscious that we've only got sort of a lunch break time of an hour, I will keep it to the starter and maybe highlight some points where we can go into more detail as we go. But equally, if there's something you haven't seen, either ask a question and I can answer it at the end, or book a follow-up session with myself and Campbell so we can go through it in more detail. So like, I won't be covering workforce planning or project-based planning, but they are definitely things that we can do similar with CapEx planning. So they're all things we commonly see. We don't generally put it in our starter pack, and equally, if I was to try and run through that, we'd need much longer than that hour slot that we have. And I'm sure everyone's got day jobs to get back to. So I'm on a planning and budgeting dashboard, and you can see it says Welcome Administrator. I've got my details. I can go to my forecast, my financials. I can look at my setup. But what I will do to start with is I'm actually going to look at some KPIs. So just some key metrics from across the business, and I'm just going to put all those in one place on the screen. So this does take a second to load when sharing through the webinar, because obviously it's using a bit of my bandwidth. But what we're pulling out is the key performance indicators, KPIs, for the business. So this one we're looking at gross profit, earnings, so the EBITDA, sales volumes, total expenses, year-on-year growth. But all of these can be fitted to your business. So just because gross profit and earnings are relevant here, if we were talking to a software company, we'd potentially be looking at renewal rates, discount percentages, and churn on customers. Whereas if we were looking at a professional services company, it would be utilization of people's times, billing rates, and potentially hours of work in the pipe. So what's on the order book in terms of hours, professional services hours. So whatever metrics you need is what we can put on here. These graphs and charts are interactive, so I can take my sales trend year to date for total sales, and I can flip that round, and instead of viewing the months, I can view it across the years, or I can expand this out and actually see it broken down by a greater level of detail, and I can see what's going on by my different account lines and what we've got in terms of product and profit margins as well. So you can put primarily financial or non-financial data. Now, most people tend to track financial, but we've already touched on a few non-financial pieces of data, such as churn in software companies, or professional services utilization, or professional services forward order book as well. So that's all present within the tool. So I'll move back across to my main home screen now, and we'll see, I was showing some figures around the forecast, comparing actuals to forecast, but where is that data coming from? So the first thing I want to cover off is the integration capabilities of the tool. When we talk about budgeting and forecasting, one thing that I'm yet to see any company deviate from is the fact that they use their actuals to seed the budget or the reforecast. So how do I get my actuals into the system? Well, I'm going to start off by showing you a report which has actuals in it, and then I'll start a drill through process. So if I come here to an income statement report, I've got actuals on the left. This is coming from a source system. It could be GP, it could be NetSuite, it could be something else. It could be coming from something that's not financial. So if we're talking about professional services or software, it could be coming from a CRM, it could be coming from a timesheeting system as well. But I've got my actuals and I can see them here across the whole of a subsidiary. I'm not splitting it out by the sub-departments within that or the categorizations of transactions or products or anything like that. And on the right-hand side, I've got some forecasted data. I'll take you through how we built that forecast shortly. And I'm forecasting out to the end of the current fiscal year to give me the outturn. And then if I scroll across, I have the next fiscal year as well. Now, you're not constrained in terms of the time frame you forecast over. I'm only choosing to show 2 years on the sheet. If I wanted to show more, I'd just be scrolling across to the right for quite a long time. It wouldn't look great. So we're only showing 2 years. But if you need a 5-year plan, a 10-year plan, that's perfectly feasible. We've sold this to, for example, a drug company. So they were modeling out the potential revenue for their pipeline of products. And they were looking at a 25-year timescale. So they were doing months for the first 3 years, and they were doing quarters for the next 5. And then from year 9 onwards, they were looking at it annually, because obviously the life cycle on a drug's 12 years of patents. You can get extensions on that, and there's obviously the pre-patent where you're doing the research. So they've got a very long time scale of their products. But then conversely, if I look at it the other way around, sold this to retail customers where they're looking at a fashion season. So primarily 26 weeks, but actually some will even do shorter runs than that. They may do 8 to 10 weeks of clothing. And again, you can use whatever time horizon you need, from weeks through months, all the way up to periods of multiple years. But going back to my actuals, I want to show you how I can drill through and see the underlying transactional data that sits behind this. I could drill through from here, but because I'm viewing the whole country, the whole of the United States here, I'm going to go down and filter it to a lower level. I'm going to filter it down to a given department and a given class of transactions. So I'm just going to click to this drillable report. So at the moment, I'm viewing it across all departments, so same data as I had before, but I'm just going to filter it down to, say, my administration department at this point. So I have administration here, and I'm just going to refresh the sheet accordingly. And now we'll see I've changed the lines I have on view. So as I change to different departments, if there's nothing in a line, so for the administration, there's nothing in the sales and revenue side, it's simply going to hide those in my view. If you want them exposed, if you want to show zeros or show blank lines, that's just a formatting setting, but it will automatically hide blank lines for you, so you're not seeing more data than you need to. But I have my data here. I've got some different expenses, and we'll look at, say, training expense. And if we take, say, March, the 32,395, we can see the actuals. But let's take a look at where that data is coming from exactly. What are the transactions behind that? So to do that, I can right-click on the data, and I get a series of options. I'll ignore all of them now, for now, apart from predictive planning. Sorry, not predictive planning, drill through. Drill through is not there. Interesting. Should see drill through. Let's try it on this report. They have changed something overnight. I've been trying to get it rectified, but it's not. It should be on this one. Same number, 32,395. If I click off, we'll see the same number. This one, I'm seeing the right squiggle in the corner, which is what I want. When I right-click, I get an option, and this time I can see drill through. So I'm on the same sheet. It's already pre-filtered to administration. It's just some different colors and highlighting. But I can choose to drill through on this number, 32394.7, and I can go to drill through to the source. I have that pop up in case I click on the wrong place. It's up to you whether or not you want that. Now, hopefully what you can see on the screen, I've got my webinar controls in the way, so just let me move them because I want to be able to see the numbers myself, even though it probably makes no difference to those on the line. But here I have in the top box my $32,394.70 and the segmentation or the dimensionality of that data as it was booked in planning and budgeting. The bottom box is my, in this case, 4 transactional lines that make up that $32,394.70. And what this means is when we do planning and budgeting, we tend to collapse things down from the transactional level. And if we take a step back from that, let's think about it in terms of the booking our actuals versus building the budget. So the account I started off on was training expenses. So we have a training budget for the year, and predominantly when we see companies budgeting for that, they'll set an annual amount. It might be, say, $300,000 or $360,000, and they'll just spread that across the 12 months of the year equally. So if it was $360,000 for the year, then there'll be $30,000 in every single month. Now, when you do that budget, you generally just stop there. You don't tend to go and specify, well, that's going to be transacted in 3 different training courses, and one of them is going to have 10 heads, the other's going to have 11, the next one's going to have 4. You would just say that department has $30,000 to spend on training. So that's why in budgeting we see it as one line. But obviously in your ledger system, when you transact that, be that in GP or another system, when that hits the books, it's going to come through as individual transactions. So you need to be able to see those transactions in the ledger system, and you need those to feed through to the budgeting system to give you the actual number. So this is what we're seeing below. We can see 4 individual transactions as booked with the dimensionality or segmentation of the data to mirror the budgeting environment. And this has been done by presetting the mapping to Great Plains, to NetSuite. And if you want to then drill through to the source system, be it Great Plains or NetSuite, you can then click on this cog and you can drill through to the source. Now, I won't go through to that. That would take me through to NetSuite in this instance, but I could have set it up to go through to Great Plains as well. I just haven't. So I'll leave that there. We're not going to start going into demoing the ERP products. This is primarily focused on the planning of budgeting. So I've shown that we can get to the point where we can see the transactional level data that's flowing through from the ledger system or from an HR system or from a professional services system, and it hits the budgeting and planning environment, and then I can use that for modeling purposes to set my budget or my forecast for the next year. So that's what we're going to take a look at next. So I'm going to come away from here. I'm going to go back into my main planning and budgeting environment, and I'm going to go right back to my dashboard to start with. And as you might expect, what I'm now going to look at, having said we're going to look at forecasting, is I'm going to click on the forecast card. So when I click on this, in our starter environment, we see 3 subcategories within this. So we see sales and Cogs, we see UpX, and we see working capital. Sales and Cogs, fairly self-explanatory. I want to put in some revenue. I want to model some costs. Working capital is there because, as you might have noticed when I had the financials card up before, which I'll just flick back to, I also had balance sheet and cash flow in there. Now, to get your balance sheet and your cash flow from your income statement or P&L, you need to have some assumptions around how your capital is going to flow. Roughly, how long does it take customers to pay you? How long does it take you to pay your bills? So that's what we're modeling through inside of the working capital assumptions that we're going there. Now, I'll start off with the OpEx. It tends to be the easier place, and most companies tend to do the OpEx the same. I will then go through and cover off sales and Cogs. We recognize it doesn't fit every business. This is primarily a manufacturing company that's selling units of items at a given price, and then you're calculating the margin on that. Now, as I've already said, we can sell this into any sector. So if you're a software company, it's slightly different. If you're selling it into a services company, obviously the revenue models are different. But broadly, the OpEx, industry to industry and company to company, tends to be the same. So I don't want to start with the top level adjustment. I'll get to that at the end. If I start off on my UpX report here, we can see again the same data for administration I was drilling through on. We can see my 32395 I drilled through on before, so that is still there. We're still looking at the same slice of data. So when I change from viewing reports to looking at my input sheet, I'm still looking at the same data. It's not like in Excel where you've got to check, well, have I got the right version of the sheet open? Am I looking at it from the right tab? It's all there. All you've got to make sure is you're looking at it from the right subsidiary, currency, and department in this case. Now, this is the UpX report at the end. What I want to show you is how I built this with some assumptions. So I'll come down to my UpX input sheet, and I'll pause again here for a second. The grayed out area is that actuals data that I had. So I'm keeping with the administration department, and I still see my 32395. And what I have is the actuals data is there, And to the right, I've got the forecast data, and I can come in, and if I simply want to manually update this as I have with payroll tax and expense, I can come in and I can overwrite this. And as I overwrite, it will save the changes on the face of the sheet. They haven't yet gone into the database, and I get a different color background to show me where I've made my changes. Now, I personally find this is much more helpful than in Excel, where if you make a change and you go away and get a coffee, or you get distracted because someone else in the finance department asks you a question, you have to remember, well, what was I doing and where was I working? Whereas at least with this color coding, you kind of get a clue as to where you were working and what you might have been doing. And equally, if you've forgotten your train of thought and you don't want to save it, you can simply hit refresh, and that will clear these numbers off. But if you want to submit them through, I can hit save, and that will then publish this through, and it will update the totals for me, and it will get rid of the yellow. So that's now just saving. You'll have noticed that I have a green background cell. Why green? Where's that coming from? Well, I'll hover on the green background cell, and it'll give us a clue. So it's saying this cell contains supporting detail. So what does that mean? Now, I said when I right-clicked earlier I was going to ignore all the other options. Well, now I'm going to start taking you through them. So we can put comments on a cell, but this one has supporting detail. So let's take a look at what supporting detail we've put in behind payroll tax and expenses. So I can see that actually for some reason on payroll tax and expenses, someone's put in laptops and a price per laptop. Now, this potentially needs moving to other benefits or another area, but what we can see is we can capture detail against account lines to go into, effectively give you more detail behind it. If you need to do an ad hoc calculation, or you want to provide some supporting information as to how that number is reached, you can come in and you can add a simple table to give you the breakdown. So if I change the number of laptops to say 50, if I edit the cell, when I click off, it will update the total for me to 50,000. And if I hit save on this, it will also publish that change number back through to my working sheet that I had in the background. So that's just going to take a second. It's pushed that through. I've now got my 50,000. So if I was to add supporting data on another cell, I would see a green background appeared. Again, you can set the colors. I had someone ask once, can you change that color? We've got people with potentially poor eyesight, or they're colorblind, they can't see green. Yes, you can change the colors. There's actually also in the top here some accessibility settings. So you've got those pre-built in the solution. They are there. It is something we've come across. We were working with a charity with poor-sighted people, so that was a particular interest to them. But there's all kinds of stuff in here. Little tangent now. I'll come back to my main focus of the demo. So I wanted to say about the other options you've got. So if I right-click on the supplies expense, potentially I want to put in a comment on this. So I can come in and I can add a comment, and I can put in a comment and say, this is due to increases in paper for an advertising campaign, for example. So whatever comment you deem fit. When I hit post, it will give it a date and a timestamp. And if I hit close, you'll notice in the same way you do in Excel, you get a little green triangle in the corner. Now, I'll show you in a few screens' time how you can also capture commentary in the system in a different way. So I've got my data here, and what I haven't touched on so far is I've done input, I've done comments, I've done supporting detail, but what about the forecasting method? So this model uses trend-based forecasts or manual. So manual, I've already explained, you can go through and type. But if I look at my trend-based forecast here, so I've got my supplies expense 6-month rolling. Now, you might decide, actually, we don't want to take a 6-month rolling. There's been a bit of change in the last 6 months. We'd rather look at the rolling 12-month average. And I can change my forecasting method from 6-month rolling to 12, or I might decide to settle upon 9 or 3, or I can forecast based upon my prior actuals. So I'll change this for now to say a 12-month rolling forecast as I outlined on my supplies expense. But what I might look at is, say, training expenses. This one I might want to do on a 9-month rolling. We had some hiring headcount very early on in the previous year, so the first 3 months are a bit skewed, so I'd rather exclude those. So I'm going to do a 9-month rolling, and then I'm going to hit save, and you'll notice that my 46,890 and my 338,044, these two cells here, will update accordingly based upon the new trending method that I've set. So it's going to take the rolling average and spread it forward. So they've changed my 338 or 338 and 44, I think it was before. I've now changed accordingly to 45 and 347. And I can also flex those numbers up and down by percentages. So we might decide we actually want to save 5% on my expenses, but my training expenses we're going to invest a bit more in, so we're going to do 12.5%. And if I now hit save, correspondingly we'll see the supplies expense come down and my training expenses will go up. So my 45,000 will go up and my 347,000 will go down. My 45,000 has come down, it's now 43. My 345 has gone up, it's now 351. So as you go through and make these changes, the system's going to automatically recalculate for you. Now we know that doesn't work everywhere, but this is how we've set it up for now in Starter. And certainly on the expenses side, taking last year's expenses, projecting them forward either with a rolling average or the prior year actuals, and calculating some inflationary uplift plus or minus, certainly gives you a very good base for your costs. Now I'm currently viewing it just for the administration department and just the United States subsidiary, but this is a multi-currency, multi-subsidiary, multi-department model. So if I want to see my other departments, I can simply click my pencil to change my view. So I was viewing administration, I might decide I want to view sales. So I'll come through and view the data for sales. We can see what we have here. I can equally come through and I can change it and I can view this for a different country. So if I go to the UK, select GBP, and I know from memory that there's data in operations, then I can hit apply. If I scroll down, oh, I've forgotten where the data is. Not in operations. Okay, we'll leave that for now. Primarily my data is in USD, so I'll go back there for now. But it is a multi-currency, multi-subsidiary model. When I view the balance sheet a bit later on, we'll see some intercompany balances being translated at group reporting rate. So let me just go back to the US and put it back to administration, because that's primarily the lens through which I've been viewing most of this so far. So that's viewing it one department at a time. If I wanted to view multiple departments, I can come to my next tab along. So it's very common. People say, well, that's fine viewing it one department at a time. I sit in central finance. I need to see all my departments, all my costs at one time. You can see that here. Equally, my supporting detail has been pulled through. So you can see I've got some other supporting detail on advertising in the marketing department, as well as my supporting detail on payroll, tax, or administration. So we can see here's the departments that are incurring expenses against my different account lines, and here's the relevant expenses. If you needed to nest another dimension in here, you could do, although the more you nest, the more lines you'll see on your report, so the longer it gets. But that's very much a configuration thing, and it's up to yourselves how you choose to do that. Now, the last tab we have here is making a top-level adjustment. So very commonly, you'll go through a plan, you'll have done a scenario, a forecast version, and you'll get told you want to make a change at the very highest level. So let me just expand this out by, say, total departments, so we can see the spend in the underlying departments. And if I scroll across, we can see I've got 6.9 million across my 5 departments that have got costs booked against them. But I might want to change that. I might have been asked to save another 5% of costs. So let's come in here and let's do a grid spread to adjust that. So grid spread will allow me to adjust my cell value. So it will allow me to adjust the total across all departments and all expense accounts. So I might decide, actually, I want to save another 2%. So we'll put that in. The system's first of all going to calculate what saving 2% is, some pretty simple maths. But now I can choose how do I want to apportion or spread that value. So if I choose proportionally spread, what it will do is any number that's there in the underlying data by account, by department, it will take 2% off that to then get me to an overall 2% off. If I chose evenly split, it would just take the difference, so the 100-odd thousand, the 140-odd thousand that I'm saving, and it would split that evenly over the number of cells that are populated. So if I've got 100 cells populated, I want to knock off 140,000, then it will knock off 1,400 over all of them. And the last one is fill, and what fill will do is it will simply calculate how many blank cells or cells do I have in total in my grid. So if I've got a 10 by 20 grid, it will know there's 200 cells, and it will basically take my 140,000 and it would then put 700 in each of those 200 cells. So it would basically populate the blanks and overwrite all of the existing data. So what makes most sense in nearly all cases is proportional spread. So we always default it to proportional spread. So I'm going to do that and I'm going to hit apply. Now what that will do in the background is going to recalculate all of the base levels. So I could continue to click down through the expenses hierarchy and see total G&A expense, and then drill down into that and see administrative expense, and then drill down again and see my underlying account lines. That'd be really boring to watch and not great to demo. It would be just frustrating for all involved. So instead, all I'm going to do is hit save. But in the background, we've got loads of yellow lines where it's made changes. So in the same way I changed data before, I get a yellow background. But now when I hit save, it's going to aggregate all of that up. And now my 6.9 million that I had before has now become my 6.8 million. So it has taken off that 2% of cost and spread it back across all of those. I'm sure this is being recorded. For those of you that don't believe me, you think it's a trick, you can always jump backwards and forwards and see all of the numbers in this grid change as well. Believe me, it's happened in the background. You can do grid spreads in UpX. You can also do them in sales and Cogs as well. So I've mentioned sales and Cogs, so it now probably makes sense, having looked overall at UpX, to take a look at revenue. So actually, there's one last thing before I go. I'm viewing one scenario here, so I'm viewing just the forecast scenario, but I could choose to look at my budget or even archived off versions of my forecast. So if you reforecast every month, you can save down those forecasts. We've just gone for a numbering system, so potentially doing more than one forecast in the month, so you just use numbers throughout the year. But equally, you can name them forecast January, forecast February, forecast March, etc., etc. You can give them whatever naming convention you see fit. But I'll leave it on forecast for now, and I'll move across to sales and Cogs. So broadly, a similar layout to the expenses side. Again, a grayed out area for actuals data. White area to the right for forecasting. You can see there's some comments in here. There's no supporting detail on this sheet. And again, we've got the forecasting method. So you can pick what type of trend do you want: 12, 9, 6, 3-month rolling, or prior year actuals, or manual. And you can do everything that I did on the UpX. I could change those methods. I can adjust those percentages. It will recalculate, but that's not really showing you any new functionality. The main differences we have in here are we have, say, a list of items, and this could equally be a list of staff, a list of products, a list of resources that you're loaning out, whatever it might be. But we've also brought into view here, instead of department, we've assumed that this is all predominantly going on in the sales department because it's sales revenue. We've brought in a customer dimension, a relationship dimension. So what this means is here I'm seeing what I'm selling to one customer, which is Abbott. If I click on Abbott, in the same way as when I clicked before on department, I saw my different departments, I can now click on Abbott and I can see my different customers. But you'll notice not only can I change to different customers, we've also categorized and grouped those customers. And you can do the same thing on products as well. So I'm looking here at different classes of customers. So I've got enterprise customers, but I could equally swap and I could look at my mid-market customers, and we see a completely different list of customers. So you can group and you can aggregate and you can choose to roll up your data however you see fit with whatever dimensionality you need. So we've grouped them on size of customer. You could equally group them on location. You could choose to group them by industry that they're in. So if you're a software company selling software, you might look at what are we selling to other software companies, what are we selling to finance companies, what are we selling to professional services companies. If you're a product company, you might look at what are we selling to stores, what are we selling to e-tailers, what are we selling to e-commerce platforms, and what are we selling through our own websites and channels. These are things we very commonly see. Equally, if you want to look at customers and those different distribution methods, e-commerce, retail, your own platforms, you could then choose, and this is why we have it here, the class dimension as well. So we've just got class C on show, but I can have other classes. I've just mapped them to my enterprise customers, so they only can be transacted through on class C. But you can say, well, that could equally be retail or e-tail or your own content platforms, for example. So that's viewing it one way round. Now, a really common question we're asked, and there's a clue as to what the next sheet I'm going to is here, sales revenue by product, is, well, what if I want to look at one product, but I want to view it across all my customers? So first of all, I'm going to flip this sheet. So we'll look at the 32 gigabyte line. We can see we've got our forecast on our sales, 153,900. But let's just look at it from a different customer so we can check when we go to that sheet that my data is correct. So I've got Chatterpoint, and we're going to see that again with Chatterpoint, we've sold some of the 32 gigabyte iPads, and we've got some data transacted here. So it's first line, 147,600. It's in July. The previous one was in May. So if I come through and view now my sales revenue by product, I can see those figures. So the Abbott in May and the Chatterpoint in July, the data's there. Now we're not showing the first two columns, but you could equally put those trending methods in there. You could also put in those percentage uplifts or decreases in there as well. Well, what we have layered on in this particular view to give you a further level of detail is not just build things up by forecast or budget, but what we really commonly see now, and it's certainly a trend in the market, is to start doing range-based planning. Now, what we mean by that is you do a base version of the forecast, but you also then want to look at a best case or a worst case, or in my case, for my particular demo, a demo case. So you can design and you can name your versions of your forecast, whatever you want. So I can come through and I can view the data for a demo case. And I'm pretty sure I cleared this out yesterday, so I won't see a lot in there, but we'll take a look anyway. So I changed my sheet. Oh no, I did fill it up with data, and you can see I've kind of just gone through and randomly populated this with numbers because there's not really any trends or patterns in there. It's just broadly speaking up, down with numbers, which it's funny enough because I built it using random number generator in Excel because you've got to build demo data somehow. There's a little trick as to how we do some of this. So I'll flip this back to my base version where I've got my assumptions, where I've built up my data properly rather than just filling a screen with data. But you can build up the versions however you wish to build them up. And like I say, what we commonly see is companies will do range-based planning, and what that means is they'll have the best case and the worst case. And it might be the best case is simply going into the sales and doing a top-level adjustment and saying plus 5%, and the worst case is going in and doing minus 5% on the sales. And you can set that up as a system process. You don't have to calculate it. You just calculate the base version, and the system will make the best and worst cases for you. Or you can go in and build them up from very granular assumptions like we were before when we start to look at sales revenue by customer, but we can build it up on a customer by customer basis, looking at the different assumptions that we're making. So this is kind of the input view of sales revenue, but we actually have reports and dashboards and things on top. Very common for sales teams to want that kind of contextual information. They don't just want to see numbers in an Excel type grid. They want to see graphs and charts and see underlying performance. So what we have at the bottom is a sales reports tab. And within here, we actually have a sales by customer dashboard. So we can see the trend of what is going on for my different sizes of customers. Now, if you are viewing this as the grid at the top, I personally find it pretty hard to see what's going on. Yes, you can see that maybe mid-market's a bit low in the first 2 months of the year, and then it seems to generally be 7 digits, but it's hard to tell what's going on within the numbers other than there's a lot of numbers on screen and they're all quite large. But when we view it as a graph, as we do down here, we can see that actually enterprise customers are kind of having a month on and a month off. So what's going on here? Can we smooth this out? Why is it we see these peaks and troughs? Should we not be seeing something a little bit more stable like we are here? Now, the next thing that immediately springs to mind is, well, why if everywhere else when it's so lumpy, from September to December, is it so flat? What's changed? Have we changed something about our business? Have we actually not finished submitting the forecast to the United States yet? Or have we made some errors when we're doing the forecast? So just viewing it as a chart, you can quite clearly see that there's a few things that maybe want to look at, like why is it so lumpy in some places and smooth in others? What's really going on behind the scenes? And if I wanted to go in and see my individual customers, I can actually drill down on the graph. So in the same way I could with the KPIs right at the very beginning, I could drag and drop and flip. I can drill down through and I can see my transactions with Abbott and Chatterpoint and various others. Now, this is where a line chart really doesn't do it justice. It becomes very hard to track what's going on customer by customer. So at this point, I like to actually change the visualization type that I have from a line graph to a bar chart. And what we're doing here is basically your users can configure the dashboards in the way they want. They can be published centrally, but then users can control their own viewpoints when they are within the dashboard. So I'm going to view this as a bar chart now, and we'll see straight away that looks a lot cleaner. It's easier to see which companies are occurring, so green being end tags and pink being blue pumpkin, for example. It's much easier to see where the transactions are. And it also highlights that from my previous sheet where we had the peaks and troughs, but we also had the flat area here. So we can see the same flattening between September and December. So maybe again here, the forecast isn't right. Potentially we've taken the amount for the month that we would see and we've just spread it across 4 or 5 customers rather than accurately forecasting exactly which customer we're likely to see the sales revenue from. But viewing the same data again, if we come down to the bottom chart, it's the same data, but instead of viewing it by customer, we're splitting it out by account line instead. So within this, because we've tagged the data by product, by customer, by subsidiary, by class, by account, you can filter any of those in your view, and you can do the analysis on whichever of those dimensions you wish. So we've shown you how you can do it by customer, by account line, but you could equally very well go through and view it by product. So that was sales by customer. We then have an overall sales dashboard, and this is much higher level. Instead of it being for, say, a sales rep who's viewing it by customer, this is more C-level. We're looking instead at, well, what have we done overall across all our products, across all our services? What's my total sales? What's my profit? What's my profit margin? What's that percent as a percentage? And that's what we're showing here. And yes, we still bring through the sales customer by trend, because that tends to be relevant. The C-levels want to see, well, which markets are growing, which are shrinking. They're going to be less concerned on a customer by customer basis though, so we've just left it at groups. And equally, we're graphing and showing here what's going on with revenue by products and what's going on with revenue for services. So we've pulled out the key KPIs, and you could choose to view these as graphs and charts as well, should you wish. But we think certainly for here, it's easier to have the numbers big and bold, front and center on the screen for you. So that's kind of a whistle-stop tour of revenue. We've already covered off OpEx, and I did say we'd take a look at working capital, so we'll go there now. So across the OpEx and sales and Cogs, we built up a P&L forecast, which was coming from that sheet I showed you at the beginning, whereby we had the actuals on the left and the forecast over to the right. And then I also said we can build up the balance sheet and the cash flow by putting in some assumptions around working capital. So this is where I am now. I'm back at working capital, and I'm going to take you through the assumptions that we've made. Now, this is a demo or a generic company, so there's three areas where you can make these assumptions, primarily inventory, trade payables, and trade receivables. So your debtors, your creditors, and your inventory outstanding. Obviously, if you don't have inventory, you would simply have the inventory sheets blank or not show them or not use them at all. But if you do, then the capability is here. And what we're doing is we're looking at, well, how many days of inventory do we have outstanding? So how much stock do we have on hand? And what rate are we seeing it depleted? We're also looking further down, so rather than just saying we want to keep 115 days of inventory outstanding on hand and model that through from a balance sheet impact. We're also looking at, have we got any additions, so one-off additions that are coming through that haven't previously been planned? Equally, are there any write-offs or write-downs? So if you've got stock that's perished, stuff that's gone bad, or stuff that you're just selling off because you want to clear space in the warehouse, you can come through and make those kind of high-level adjustments. And what it's doing is taking the overall closing inventory balance and adjusting it down to give you the closing inventory balance based upon the stock after you've made the adjustments for additions and write-downs. Similar with trade payables, similar format. Again, we start with the opening and we work it through to a closing. And what the adjustments we're making here are, what percentage of my purchases are being, of my payables are being made on credit, and we can see that model through here. And then what are the terms, well, it's bringing through first of all days in the month, but then what are the terms around those creditor amounts? So we can see, well, at the moment we're paying our invoices after roughly 35 days, but we can equally model through what if for the new fiscal year we want to change it for 28, what would that look like on our cash flow? Similar thing on trade receivables, but obviously instead of it being money you owe, it's money you're owed, so what you want to receive in. You can model through what's our day sales outstanding, so you could say, well, it's currently 55 days, what if we can get that down to 30 days? How would that affect our cash flow? What would that look like going forward? And that's what these assumptions can all drive in the background. So again, what we're doing is we're getting from the previous closing trade debtor calculation, going through, making some adjustments to give me a revised closing trade debtors, and then any other sort of extenuous items that need to be added in as well to give you the overall what you expect for trade receivables closing. And then I will come through to the balance sheet and the cash flow, and we will see those details being reflected through. So here I've got a balance sheet report. I start off with my bank accounts, so I get my total cash, my total assets, and then scrolling down I've got all of my liabilities. So this has all been built up, and this comes from mapping my P&L accounts to their relevant balance sheet and cash flow accounts, and then from making the assumptions around day sales outstanding, days payable outstanding, etc. I can model through the impact of, well, if I've bought something for £1 million in the current month of, say, November, but I don't pay it for 60 days, and actually that £1 million invoice is going to go through the cash flow in January, but it's obviously going to sit on the balance sheet for November and December. So it's that kind of thing that we're doing here. And here's just one particular view for one country and one currency, but you'll notice I have a group consolidated report, so we'll show that. And what we have here is we're viewing it in reporting currency for a given month, and we can see what we've got going on across the different months, and in different countries. So we've got Australia, Canada, UK, and United States to give us our overall company consolidated position. We can do the same thing on the cash flow. So broadly speaking, it's a similar layout. I have a cash flow report, and I've got my actuals and then my forecasted amounts in here. So cash flow reporting, group consolidated view, same as we had before from the individual report in one currency with one country on show. Instead, now we're looking at the group view in the reporting currency, which is USD in this case, and we can see what the cash flow looks like in the month of January for Australia, Canada, the UK, and United States. And if I scroll to the bottom, we've got cash, net change in cash to go through and give me the cash at the end of the period. So if you had an opening balance, what's the movement, and thus what does it look like overall? One thing I haven't touched on that I will briefly, I'm conscious of time and I want to leave a good amount of time for questions. We can get at all of this from inside of Excel with our Smart View add-in. To download that, I simply go up here and I would go to Downloads and select Smart View. Obviously, I've already installed that. Last thing you want to do is watch me doing an install. But if I come to this income statement report at the beginning, the first one I showed you, where we had actuals and forecasts, I can actually get at that from inside of Excel by going to Actions, scrolling to the very bottom, and going Open this up in Smart View. So I did that earlier on, and I actually have that here for us now. And I have the same report with my 186,983, my 4.298 million. You can see the numbers are the same. I can get at the same reporting data. And if I just put my Smart View panel on the side, what we can see is the address that I'm connected to inside of Smart View in Excel is the exact same web address as I'm connected to in the cloud to get at my data from within, in this case, a Chrome browser, but it works across any browser. So within here, what's the advantage of this? Well, one, it means everything I can do on the web, I can do inside of Excel. So depending upon whether you're a finance department that wants to move away from Excel and put everything on the web, you can. Equally, if you're a finance department that likes Excel, you want to keep the familiarity of it, you can. So you've got flexibility to do it either way. But the real power with this tool comes in when I kind of go through and I want to build my own reports. So to do that, I'm going to hit Analyze. And what this does is it takes it from a pre-formatted report. Because I have the right permissions, I can then analyze all of the data and build my own free-form or ad hoc reports. So this just takes a few seconds. I know it's gone not responding. That's perfectly normal. It's not like when you're in Excel and it says not responding and you're thinking, oh, what haven't I got from my last save because Excel's just crashed. So I'll nest this navigator at the top, and this shows me all of my segments that are flowing through from my ERP. So the account, the department, the product, the channel, the customer, all of that good stuff is up here. But what we have is my actuals and my forecast. So great, that's giving me an outturn for the year, but what I really want to do is my analysis between actuals, budget, and forecast for, say, the month of May. So let's keep May. I'll just choose to keep only. It's going to get rid of any other line that doesn't say May. So you'll see it keeps actuals FY18 and forecast FY19. But really, I just want to look at the figures for FY18. And what I'd actually like to look at as well is the budgeted figures for FY18 and for May. So I'm going to enter those in. Now, all I've done is type those. The system then picks up that they are within the database, and it will then show me the relevant data for that. So it's now going to refresh. It will update the forecast columns with FY18's numbers instead of FY19. It's populated the budget column, and I can equally then start doing variances such as actual versus budget or forecast versus actuals. So what I'm doing is copying and pasting, and when I hit refresh, it's then going to populate those columns for me. Now, you can see I've made an error. I've actually done that deliberately. I wanted to show you what happens if you don't get the things right. How would I then find the right member? I know I want to do actual versus budget, but I just can't remember what it's called. Well, that's quite simple. What I can choose to do is I can use the member selector for me. Now, this lets me search within my whole dimension what I've got there. So at the moment, I'm looking at account. I'm actually doing this on a scenario dimension. And what I want is I've got actual, I've got forecast, I've got budget already. But I'm looking at my variance scenarios, and you can see we've pre-built quite a few. I should have put budget rather than bud. So very simple. I move that across. It's the kind of mistake you make all the time, but you just, until you remember everything off by heart, you want to know how you can find it. So you can go through, you can use the member selector, and if I now click OK, it will put the right format in the cell, and when I hit refresh, it will now give me that blue background for my dimensions and the grey background for the data. So I've kind of fixed the problem that I put in deliberately. You can do that on any of the departments. So at the moment, I'm viewing it for all departments, but I can equally choose to filter this back to administration by using the 3 dots. And this will bring up the same member selector window that I had just now, but it will take it straight to the department dimension or segment for me. Just give it a second. So again, I can navigate in and I can see all of my underlying departments. And I might decide I actually want to add sales, engineering, administration, and operations into here. When I now click OK, what that will do is I'll add them into my drop-down filter, and I can then choose them from within here. It does take a few seconds, and it certainly runs slower through the webinar, but I've now got total department, but I can equally choose to filter this to sales and refresh, and we'll see the corresponding sales data. To prove throughout that I've been using the same data, I'll go to my trusted administration department, and we will see in here some of the figures around, say, training expenses. Now, I didn't choose May. I believe I chose March at the very beginning. And if I've left my drill through open, I can see it was the 3rd period March, and I'm looking for 32,394. So I'll change this to March across here. I'll hit refresh. In fact, it's done an Excel formula and changed it to March, April, May, June automatically. But my main point is my 32,394.7, I can get at the exact same number from inside of Excel. And if I wanted to drill through from here, I could right-click and I could drill through from inside of Excel as well. So you can do the drill through from the web or Excel to get back to your NetSuite GP or any other system. And the last thing I want to do is save this report. So for that, if I want to reuse this report, I'm going to use it regularly. Granted, it now makes a bit less sense because I've got March, April, May, June, July across the top. But if I want to save that, I can save that up into my library of reports, which is going to show on the right-hand side. So I've got a library here, and I can save this as, say, an ad hoc grid, and we'll call this actual versus budget versus forecast. And that will then save it up into my library of reports, and I'll see that reflected on the right-hand side. So then if I need to use it again, I log back in. I don't have to build my new report. Yes, it only takes a few seconds, but why should you rebuild the report if you could just save it and open it up again and equally publish it to your colleagues? Now, I'm conscious of time, and I did mention the ability to input commentary, so I will end by showing you a screen where you can input commentary against the accounts. So if I've got actual versus budget or actual versus forecast, I don't want FX rates by subsidiary. Clicked in the wrong place. I want reporting and analytics. So within the reporting, we can have dashboards, again, an income statement dashboard, so looking at KPIs around that. But what I really wanted to finish with is the variance reports. You can put graphical information in there, but you can also capture commentary against the accounts. So if we look at actual to forecast for the current month, we can see for August what we've got written in. And I'm not sure which one of my colleagues wrote this, but they were clearly having a bit of a joke because at the moment you're 50-odd thousand pounds behind forecast on revenue, and apparently everything is fine. So I could choose to come in and I might choose to overwrite that comment and say, due to have one more deal close in August, which is for a value of $50,000, which is potentially a much more useful comment than everything is fine. But then I hit save and I can publish comments through. So you can put in comments around the variances. Why have you got differences to budget? Why have you got differences to forecast? And you can enter that commentary information within the sheets. Now that pretty much covers the overview of the starter edition that I've shown you. I know we've covered quite a lot of content. We started with integration. We then went through OpEx trending, revenue trending, reporting, working capital, and then integrated balance sheet, cash flow, and P&L as well. So with that, I'll pretty much start wrapping things up. So we'll get Campbell back on now at this point, and we'll open up the floor to questions.
Great, thank you, John. I'll leave you as a presenter just because some of the questions you may need to show some bits and pieces, if that's okay.
Yep.
Excellent. So the first question that's come through, is it possible to do project-based planning?
Yes, so that's something I alluded to at the beginning. That would just be a difference on the revenue side of things. So rather than just taking a trend, you build it up by, say, how you're structuring your project. So it could be a work breakdown structure, it could be milestone billing. You build it up from project-based assumptions around the revenue or the cost basis instead of just going, well, there's my products, let's trend them forward. Obviously, that doesn't work for a project-based company. So yeah, there's a lot of flexibility in here around how you construct the revenue side of things.
Excellent, great. Just going through. Next one. Can the solution also do workforce planning as well as the financials?
Yes, it can. So in here, you'll have noticed that I did have some workforce accounts, say salaries and wages and payroll and tax expense. Now, we just trended those. We kept it very simple. One thing we really commonly see for people that start off with Starter is they want to add workforce in, and we have a whole workforce planning sort of module or card in the same way we've had them for CapEx and OpEx and things like that going forward. And actually, yeah, CapEx is another common one that we see people wanting. But yeah, we can do workforce on a by head basis, and you can look at allocating staff between departments, building up from salary plus NI, plus pension, plus benefits, plus car allowance to give you effectively from salary, what is my fully loaded cost to the business of an employee. So yeah, we can do a lot more detail around workforce rather than simply just taking a number and trending it forward.
Great. And the last one I see here is, can you create management reports using a different accounts hierarchy than the GL?
You can. That's another good question. So if I came back to my Excel, obviously I've got a given view of my accounts here. What I could equally do is I could choose to insert or aggregate these in any way. So one thing we'll really commonly see is companies will have one way of reporting in the ledger, but then the management accounts, you have different parents, different roll-ups. And what we say is, so long as you're using all of the leaves or all of the individual account lines, you can put as many different roll-ups of that data as you want. You can also do the same thing on your products, your customer hierarchies. So you might have one way you report it in sales, but you report actually products a different way in the product development team, or you report things differently in the project team. So you can have multiple roll-ups or parallel hierarchies in all of your different dimensions. And yeah, management accounts tends to be the most common one, but we equally see it with products and product analysis and things like that as well.
Great. No, that's great, John. Thank you. So what I'll do is I'll just change back to my screen. So I just do that. Thank you. Great.
There we go.
See that. Excellent. Thank you. So that was a Q&A that we had. So thank you, John, for that. Great to see the demo. Great to see it in action and what it can and can't do. So we've got an offer that we got from the Planning and Budgeting Cloud Services. So that was, I mean, as we said, John's only just touched on what the actual service can do. I mean, that was just a starter issue, as you were saying, just a very, very basic overview. There's a lot more to it. But we are offering a 25% discount for those attending today's webinar, and that's valid until Christmas Day, so 25% for the 25th. So if you are interested or you want to see more of John's demo or find out a bit more from about the PBCS, then please contact us. The telephone number is there, which is 01252 811 663. Or feel free to email sales@nolanbusinesssolutions.com, and then we'll liaise with John and get you in contact with one of his colleagues that can help with any questions or queries that you may have about the solution. So I'd just like to say thank you very much for John for his time. Thank you very much for the attendees for their time for coming along and joining us today. And yeah, please do get in contact if you want some more information, and hope you have a great rest of the day. Thank you very much.